What do we got going on? We had 8:30 this morning. We had core retail sales. So we update this because it's already happened. Core retail sales, you can see, was 0.1%, which is greater than expected. However, not as, or I should say, it was positive. It was less than expected. But the retail sales, the full-blown retail sales, was 0.4%. And the expected was 0.3. So this is a good thing. This is a positive number. I don't care what the expectation was. That means that core retail sales were above. We're positive. Therefore, that's good for the economy. The Empire State Manufacturing Index, boom, big miss here to the upside, 31.2 versus a 0.3. So there you go. Big number. Import prices up well above expectations. So what is this telling us? It tells us that sales are up, but the question is sales up because prices are up, or is it a per unit? That's the question. So it's hard to say whether this is inflation-based or if this is unit-based. Are we buying more stuff, or is it just costing more? So that's the question there. Empire State, this is really bullish for the economy. Import prices going up is obviously inflation. So what is all this saying? It's saying if you take the retail sales as at face value and say, hey, we're buying more stuff, then that is bullish for the economy. If import prices are up, that is inflation. Both of those together, plus the Empire State, economy is roaring on, and guess what? The Fed is not going to lower interest rates anymore. So the market initially liked the information, and now it's not so sure. At 9 o'clock, we have FOMC member Collins speaking. 9:15, capacity utilization rate and industrial production. 10 a.m., business inventories. And then we have an FOMC member, Williams, speaking at 1:15. So there's your Friday news. Looking at charts, we kind of have this pennant going on here. We have broken outside the bottom side of this. Yesterday, ugly day, particularly after 3 o'clock, when Fed Chair Powell said, hey, we're probably not going to be lowering interest rates anymore. Boom, there it goes. The market goes down. Gap down opening this morning. Yeah, it is what it is. The market's finally going, hey, what? The economy's not as good as we thought. Or the interest rates aren't coming down. What? And yep, and you get a reaction. So there you have it. Looking forward to the inventory. Here is really interesting because price action down, but inventory ended up at 9,600 plus contracts to the positive side. I think this is catching a lot of people off guard, and we're going to see some ugly selling. This tells me that people bought all the way down through this, as you can see here, and now it's gapping down even farther. These are the weak hands. We're going to probably see some nasty selling potentially today. What's going on overnight? Overnight, we had a gap down plus a range of about 44 points. That's above average. We're back down under 6,000. What do we got going on? The good news is that we've got volume. We've got chart structure down here, so we have some clue of where support and resistance is. We've got some resistance at 59.72, 59.90. Of course, the big round number of 6,000, and I'm going to say 60.16. Support, on the other hand, we've got some support at 59.27, 59.20. 5,900, of course, will be a big support. We break below that, it gets kind of ugly. 58.70-ish area for additional support. Stock Trader's Almanac for Friday today is 57.1, 57.1. So a positive bias based on the historics from the Stock Trader's Almanac. Hope you have a great day. Happy trading. See ya Monday. Hey, thanks for watching the morning brief. Check out my website for more information, oneononetrading.com. Take a look at the Troy levels, a trade location finder for the futures markets. Help you find those levels of support and resistance that are just so hard to find. I also do personal coaching and mentorships. So go ahead and take a look at my website, oneononetrading.com. Thanks.